Looking for trusted vehicle protection? American Guardian Warranty Services has you covered. Since 1998, we've delivered top-tier coverage, award-winning support, and industry-leading training to keep your business moving forward. Every way forward.
Welcome to this weekend drive edition of Daily Drive for the fourth week in July 2025. I'm Jake Neer in Detroit, in for Kellen Walker. We're breaking down some of the biggest stories in the auto industry from the past week and looking forward to what's in store in the days ahead. Today, I'm joined by two of my automotive news colleagues. Larry Vellequette covers Subaru and Toyota for us. Larry, welcome back to Weekend Drive.
Thank you, Jake. Great to be here from Greater Metropolitan Auto Lake, Michigan.
There you go. And Michael Martinez, of course, covers Ford and the UAW. Mike, welcome back to Weekend Drive.
Thanks for having me.
All right, so this week was a big one, and I mean, it seems like every week has been pretty eventful lately, but this week kicked off the latest round of earnings results for the second quarter. Stellantis saw a $2.7 billion loss. I don't know if I've had that to say about too many automakers since I joined Automotive News 3 years ago, but that is a loss. GM net income dropped 35% with $1 billion tariff hit, and Tesla profits were down double digits. Do you guys think it's time to start ringing alarm bells here for the industry?
Jake, if you'd been here long enough, you know that losses happen.
Yes,
they're more common than what you would think. But in terms of alarm bells, I think what you're seeing is the first fruits of this new tariff regime that we're all living in. We didn't know what the tariffs were going to do, when they were going to land, what they were going to be. So everybody held their powder, and their earnings are taking a hit because of it.
Yeah, I don't know if ringing alarm bells is the right phrase here because, the profits are down a little bit. It certainly hurts. But at the same time, there's still levers these companies can pull. They are, still mostly making money. Stellantis is maybe a little different case. The tariffs isn't really the main reason why they're losing money. But, you take a look at it and prices haven't really gone up in the showroom. Customers walking in, MSRPs were pretty steady in the second quarter. So if the companies are really hurting into the future, they could raise those prices. GM says it expects to offset about 30% of its tariff costs. Ford expects to offset a bunch too. So there's still moves they can make. Yeah, it hurts, but probably not the worst thing in the world.
That's an interesting point, Mike, because it seems like when it comes to who is going to shoulder most of these tariff costs, we've heard from suppliers saying that they've been able to pass a lot of those costs on to automakers. And then automakers saying, GM, I believe, is the example from this week, saying, we're not raising prices in the showroom. So where is it falling right now? It seems like it's falling directly on the automakers themselves.
And again, we're still in the early days of this. Yeah, we have a better sense than we did in the first quarter. But, Trump is making trade deals almost every week. He's making an announcement or an adjustment to what he's already said he was doing. So there's still a lot to be determined here.
I will say this, though. Automakers may have put it on their balance sheets for now because they didn't know how it was going to land, but don't think that's going to be permanent. Eventually, consumers are going to pay these. And that's true for everything. Eventually, the shareholders are not going to pay these. The executives are not going to pay these. Consumers are going to pay these. When they land, it's just going to take some time to go out in the wash.
Sure. Now, Mike, something that I'm starting to wonder about as we see this progress is it's about the UAW's stance on tariffs. President Sean Fain, since calling Donald Trump a scab many times during the campaign season last year, has been backing his trade approach for the most part. But union members do care about profits. They get important profit-sharing checks, of course. And if this keeps up, I'm wondering, is it going to test the union support of President Trump's trade war?
I don't think it is, mainly because the UAW under Sean Fain has really tried to take the long view in a lot of instances, including with these tariffs. And again, to be clear, they're not necessarily supporting Donald Trump. They've had this position on tariffs long before he came into office, even the first time. Their whole goal is to essentially strong arm these companies into investing more in the United States. And the way they view it, they're willing to take some short-term pain, even if that means lower profit sharing checks. The perfect example is that 2023 strike. They walked off the job, walked away from those steady paychecks for 6+ weeks, lowered profit sharing checks as a result that year, but they were willing to do that to set up better working conditions, more opportunity for temporary workers. And you're seeing that here. The way the union views it is a month or two of extra pay in the form of a yearly profit sharing check doesn't really equal 30 years worth of a steady paycheck that would be from a new job from GM or Ford or any company investing in building a new plant or adding a third shift to an existing plant. So they're taking the long view here.
Not to beat a dead horse here, but is that a realistic expectation?
Well, I mean, we've already seen GM make their announcement about reshoring product from Mexico to the United States. Yeah, it's going to take a few years, but it's exactly the kind of thing the unions wanted. And they still maintain that each of the Detroit 3 and VW could tomorrow fill up some underutilized plants and help out their cause there. So I don't think the union's completely in lockstep with Trump. They're willing to go against him. We saw this week a trade deal with Japan that the union criticized because they think it's going to lead to, an easier time for Japan to sell vehicles here. So they're willing to break. I just don't know that they will here because the ultimate goal still is more U.S. investment.
This whole enemy of my enemy is my friend strategy has always been successful, no matter when it's been employed by anybody.
Do I hear a slight bit of sarcasm in your voice, Larry?
No, not at all.
All right. Well, just to wrap up our conversation about earnings and sort of the current trade environment and how those things play together here, Larry, you cover Toyota. Mike, you cover Ford. Do you have anything to say about what we should be keeping in mind, as we wait for those automakers and others to report their earnings when it comes to this environment that we're in right now?
So I think from my companies, Toyota and Subaru, both, don't want to leave them out. I think you're going to see on Toyota's side, they're going to continue to make money. You don't bet against Toyota to make money.
Right.
They will make money. And they're seeing their strategies, pay dividends. The approach to hybrids and that are still selling like hotcakes. I'm not worried about them.
I think Ford still, people agree, is in a better position from the tariff standpoint than the rest of the Detroit 3. They'll still see a hit. It was about $200 million in the first quarter when things were just beginning. So you would imagine it would be greater in the second quarter. But they're also going to get dinged by quality woes, which continue to hurt them. They announced a recall the other week of about 700,000 utilities over a fuel leak. And they said that's going to cost them $570 million in the second quarter.
Well, as our listeners know, we are always on top of earnings coverage here at Automotive News. So for the latest earnings results, you can go to autonews.com and find those in the pages of Automotive News. Coming up, we'll talk about a couple of other big stories from this past week. The EPA is looking to ditch its CAFE standards. And also, we'll talk about our annual Future Product Pipeline series that rolled out this past week. That's next on Weekend Drive.
When it comes to vehicle protection, American Guardian Warranty Services has you covered. Since 1998, AGWS has been a trusted leader in F&I solutions, offering top-tier protection plans for autos, RVs, power sports, marine, and more, all backed by A-rated insurance carriers for reliable coverage you can count on. But we don't just offer protection, we deliver results. With award-winning marketing materials, expert dealer training through AGWS University, and exceptional customer service, we are committed to helping your business grow while keeping your customers protected. Join thousands of satisfied dealers and agents who trust AGWS for comprehensive coverage and unmatched support. Visit agws.com or call 800-579-2233 today to keep your business moving forward. Every way forward.
Welcome back to Weekend Drive. I'm Jake Neer with Larry Vellequette and Michael Martinez. So guys, this past week, we at Automotive News rolled out our annual Future Product Pipeline series covering all of the major brands' plans. We spoke with Lindsay Van Hully on Tuesday about General Motors products. Let's talk about some of the other things that we're expecting to see. Now, we haven't seen the reporting yet from Ford, and Larry, I know that you've got some stuff coming up in the coming week, but let's start with Toyota regardless. That Toyota, it just continues to be an enigma. For years, they were criticized for being slow on EVs, not offering any real fully electrified models in wide scale. Well, many other brands pledged to go all electric. I believe they now have one EV that's available here in the US. But it seems like the tables are turning here. They're steadily rolling out more electrified models as everyone else seems to be retreating. Larry, what gives?
Well, let's start with this. Toyota plays a long game. They have always played a long game. And so a couple of years ago, with the onset of the last administration, the public pressure groups started hammering Toyota because its cars were boring. It didn't have an EV, an EV. Well, it has an EV now. It has a couple EVs, one for Lexus, one for Toyota on sale. They've got a couple more coming. What's interesting in Toyota's future product is that their future product largely isn't changing. They're not paring back or racing away from EVs just because of the change in regulation. They're going to continue to make them, going to continue to sell them, which is really ironic because they got just hammered for being slow and, not racing into EVs. And now everybody else is pulling back and they're like, nah, we're still going ahead. They're a unusual EV champion. Let's put it that way. But I do want to talk about product planning for just a minute because I know mine is done. It's going to run this weekend. Mike's is coming next month. I will just say this. I'm do a little prop here for our listeners. This is what product planning sounds like in 2025. That's for every company. This was a really difficult challenge this year to try and suss this out because plans are changing literally every day.
I was thinking about firing up my shredder there, Larry, but didn't have the time.
One of those. I do have one of those sitting right next to me. I could have done that.
Yeah, I'm not particularly looking forward to digging into the reporting on Ford because I can imagine it's going to be pretty tough. But, I would say Ford's sort of started their pivot already. A few years ago, they announced sort of the intention to go away from the larger EVs into the smaller, more affordable models. They're really worried about the China threat. So we have a midsize EV pickup we're expecting in 2027 that's supposed to be on their low-cost platform that's going to underpin a number of vehicles. But at the same time, they're continuing to invest on the gas and hybrid side with the nameplates like Bronco, Mustang, F-150, Ranger.
Don't forget my Maverick.
And Larry's favorite small pickup, Maverick. So I don't know that too much will necessarily be changing there. Again, when you talk about the monkey wrench that tariffs throw into this, Ford doesn't make a whole lot outside of the United States. There's a few key models they could maybe look to move. I'm not saying they are. I'm just, it might be a conversation they have. But by and large, their plans are sort of largely set by now.
Taking a page from Aesop, slow and steady wins the race. It sounds like Larry is kind of that Toyota. That's their philosophy here. I'm just wondering if that's possible for U.S. companies in the environment that they operate in with quarterly earnings results and the having to answer to stockholders and all this. It seems like it's harder for American companies and others to adopt an approach like that. Is that a fair statement, Larry?
I think it's fair. I think the difference is that the domestic automakers respond to quarterly results, right? They get quarterly results. They respond. I don't think I don't think Toyota does. They're
Got
like,
it.
okay, well, here's what we did last quarter. Here's next quarter. But our game isn't changing. And, I used to cover one of the Detroit Three. I covered what was then FCA for a long time. And you can really tell, it's kind of striking, the difference between playing the long game and reacting, and, trying to outguess the market, and, trying to care about quarterly earnings first and foremost. It messes with your game plan.
All right. Well, finally this week, we got news that the EPA is putting in motion a plan to ditch its CAFE standards, which have already been defanged essentially by the Trump administration, which says it's not going to enforce those standards. Talk about the tectonic shift that this would be for the industry after, decades of having to meet strict federal emission standards. And Mike, we'll start with you.
Yeah, I think it's just along with sort of this pivot away from EVs and maybe less demand than what was expected, it just means that we're going to see a longer runway here for ICE engines and for gas guzzling V8s. But, the aspect that I'm interested in, at least with the company that I cover with Ford, we just talked with Bill Ford's children the other week. This is his thing, environmentalism, and maybe taking a stand when it's not necessarily popular or when the rest of the industry is going the other way. So this is just going to be another opportunity for him to show that if he truly believes that the company can stick with the standards that had been set, they can continue moving that way. We saw that even during Trump 1.0, when there was some concern over setting different standards in California, Ford chose to sort of buck the rest of the industry and stick with the stricter California standards. We'll see what happens moving forward here.
I will just say this. I wrote a column back in January before this administration, or right as this administration took power, suggesting that they burn it all down, right? Just go completely free market, burn all the regulations, destroy FEMA. I just want to say here, in case somebody didn't know, I was joking, right? That was satire. I didn't know that was the game plan to actually let it burn, but apparently that's the case.
You're saying that this is all a result of your column, right, Larry?
I didn't know I had that power, but apparently, somebody took that as a game plan. I will say this. I think that any automaker, any product planner, to go back to our future product series, any product planner that looks at the environment in 2025 after this happens and thinks, okay, well, I can plan the next 8 years or 10 years based on this knowledge because it would never snap back, right? I think you'd be a fool. I think they actually need to take a lesson from the Japanese here and just stick it out, whether the rules are there or not. Because like Mike said, if they don't take that long view, it's going to really, really hurt when power does eventually shift.
I love it when an episode of Weekend Drive has a moral to the story, a theme that we keep coming back to.
Yeah, and right out of Aesop's Fable. So
there you go. Perfect. All right. Well, Larry Vellequette covers Toyota and Subaru for us here at Automotive News. Michael Martinez covers Ford and the UAW for us. Guys, thank you so much for joining us this week. Really appreciate it.
Happy to be here, Jake.
Thanks, Jake.
That's all for this Weekend Drive edition of Daily Drive. I'm Jake Neer, in for Kellen Walker. You can get the latest news on earnings results, tariffs, and everything happening in the auto industry at autonews.com. We'd love to hear from you. Let us know what you think of the show and the topics we covered today. Send us an email at dailydrive@autonews.com or leave us a voicemail at 313-444-2774. And if you enjoy the podcast, remember to like, leave a review, and subscribe so you never miss an episode.